Hello, everyone.
Good afternoon, everyone. Thank you for joining us at the pitch stage to talk about Tallyx. I will have our CEO, DTM Menon, just to give you a brief intro, and then we will tell you guys a little bit more about what we do.
After spending about 30 years building applications for trade finance for global banks like ABN AMRO, Citibank, Rabo, UniCredit, and many others around the world, we basically started working on this project about 2 years ago, looking at how we can actually simplify global trade transactions for buyers and sellers everywhere by creating a decentralized platform and trying to undo 30 years of centralized work that I've been partly responsible in pushing into the industry. And I think basically the idea here really was that we are today in a peak era of centralization. We've got 7 major global, almost monopolistic platform companies who dominate the world space today. That's 7 out of the top 10. And we think that we are at the very beginning of a pendulum starting to swing the other way towards decentralization. And when it starts to happen, we want to be there. So without further ado, I'm going to actually give you a short video which actually talks about the complex space that we're in.
Sellers require financing to manufacture and ship goods. Distributors require financing to hold inventory before sale. Financing can occur at various stages of the life cycle. The earlier you finance, the more risk there is. Trade assets generated from each stage can be used as collateral for funding working capital. However, current industry inefficiencies hinder growth. In a highly efficient future, most trade assets will be tokenized. The Tallyx top supply chain drives full lifecycle management, from procurement to payment, supporting the various SCF programs. When financing needs arise, top supply chain tokenizes trade information into Toki tokens based on ERC 721. Tokis are sent to the Tallyx top marketplace for financing by marketplace lenders. Here, different groups of financiers based on risk appetite, compliance, and regulations can open trading floors, also known as Toki floors. Each Toki entering the marketplace is routed to a target floor for funding by financiers. There is an explosion of blockchain and non-blockchain trade networks that operate as walled gardens that top marketplace can leverage. For example, Bank A can only onboard roughly 15% of an anchor buyer's suppliers on their SCF platform due to compliance and other constraints. Top Marketplace can step in to tokenize the remaining 85% to the best funding partners. Bank A can also forward its own 15% to their own trading floor in Top Marketplace. This way, Bank A and its clients benefit from a blockchain-based digital experience with minimum investment and also deepen their funding opportunities. This win-win strategy will attract participants to our growing marketplace, eventually prospering into a powerful network of networks. It takes a seasoned team with 3 generations of global trade infrastructure experience to build the future top protocol to power our sustainable Tallyx trade platform. So come join us and trade on top.
So as you can see in the video, there are a lot of existing problems that in the current supply chain and trade finance industry, especially erosion of trust, SME unserved and underserved, global supply chain efficiency, and trade fraud. So we believe blockchain technology provides an optimal solution for this issue because no intermediary is needed to endorse trust. So we start with building a trade obligation protocol, which is the foundation layer protocol. It will be the common building blocks for a lot of the app development and also community participation on our platform. We also very carefully partitioned sidechain and main chain, not only just for performance reason, but also for business trade secret reasons. Buyers will not want to share what price they pay for certain goods and services to other competitors. And in addition to this protocol, we're also launching a platform layer which has SDKs and APIs for third-party partners to build on top of it. And this platform layer is foundation public chain agnostic, which means we can adapt to Ethereum, Hyperledger, and any other like EOS or Interledger such protocols. So inside our top ecosystem, there are two core components, top supply chain and top marketplace. Top supply chain manages trade operations and provide comprehensive financing options. So when anyone wants to finance, then a non-fungible token will be created to wrap around the underlying trade asset and sent to marketplace for funding. So we believe the world trade assets are becoming tokenized, which will introduce Toki. So Toki has a new ERC standard 1513. This is just assigned by Ethereum Foundation to our project because this will be a new standard to support non-fungible token with refungibility. This token will support fractional ownership, which means you can use this Toki as payments to your upstream suppliers. You can use this Toki to get fractional financing, which cannot be done today in the traditional supply chain finance platform. And our Toki Tower is a new style of marketplace. This is not a marketplace that just one rule fits all. We can actually have different supplier, financier, or group of financier to create and customize a Toki floor in our building. So each Toki floor will have different financing criteria. You will have your preferred buyer and supplier to be financed. If you don't want the asset, you want to pass on to the tier 2, tier 3 financier, you can pass to different floors. And within each trading floor, we can also have tools help financiers to customize trading rooms by country, by credit rating, by risks, a lot more than that. So I'm now going to hand it over to our CEO, Aditya, to introduce a lot of new exciting opportunities we're introducing to the global trade.
Thank you, Sally. So first and foremost, if you look at the supply chain industry, there is no MasterCard and Visa. But large buyers, whether you're a Toyota or a Vodafone, are definitely contemplating having a branded token because it's visible both in their supply chain and in the extended supply chain as a kind of guarantee or trust factor. Because suppliers everywhere, buyers everywhere, are trying to bring suppliers closer to them. Look at the case of Tesla. And you've got basically now a reverse situation where basically Tesla's suppliers are now trying to finance the main company, right? So a branded token therefore goes a long way into binding your supply chain close to you. And it's very important, and there's no mechanism for that that exists today. But a digital token can bring all of that value to the supply chain, which has been otherwise pretty much unchanged for 400 years from the Hanseatic League. The second one is the digital marketplace. So we talked about the marketplace. The third one is that people are building a lot of islands today. So you've got Swift and the banks today who have created a fairly large, loosely aggregated, interoperable platform. And today, then, there are bank consortiums building like Marco Polo and WeTrade and many others are building other centralized platforms. So we're saying, what's the value of going from one centralized platform to another one? You might as well go to a decentralized model. So we're trying to build actually the network of networks. And the first job in there is standardization. So how do we create an asset token that is refungible, that can be used to bridge both legacy networks and future blockchain networks and platforms? So the network of networks concept is really important for us. The global lien registry is really important. When I was at Citibank, we had a $400 million fraud where basically the Mexican oil supplier, one of their suppliers, put in $400 worth of Mickey invoices in the middle of real ones. And we were not able to distinguish that, resulting in a $400 million loss to the bank. So those kind of things can be avoided by having a global lien registry to ensure that we provide an Oracle service saying that if any asset's ever been financed, you can always come and check with us, and we'll give you a yes/no answer. Last but not least, we're working on a new dynamic credit risk model called the reputation avatar, which allows you to actually do the reputation risk not just on the participant, like the supplier, but all the way down to the actual good or item being traded. And that's really very unique in the industry today. So from a network of networks perspective, what we're doing really is providing a super highway to connect disparate trade finance platforms and initiatives that exist today. And we basically will secure that with data hashes on the DLT so that you can check for presence or absence without necessarily getting access to the specific information. And that's some of our secret sauce that we built in terms of our data privacy. Moving on to the architecture fairly quickly, we are basically enterprise architects, and that's what we've been doing for a long time. The first thing we did in 2017 was to kick the tires on Hyperledger. We found it wanting. We built a stable build of Hyperledger on Amazon using load balancing and failover, and we put that back into GitHub for the benefit of the larger community. So as we launch this, we are focused completely on reliability, fit for purpose, adaptability using a DLT agnostic adapter. So today we support both Hyperledger and Ethereum sidechain and main chain. And with demand over time, we've already got some people in China saying, come and build on our Skynet, come and build on Trust SQL, which is Tencent's platform. So we do have people who are looking for us to adapt this into other networks. On the privacy and security side, we are basically building an enterprise-grade security model. It's based on decentralized digital identity. We're working with providers such as Civic and Uport and Trulio for KYC and digital identity provisioning. And we're absolutely maniacally focused on performance to ensure that this can actually handle the kind of trade volumes you've had globally, which is why we started with the non-functional requirements even before we started to build the application features. Just in terms of the team, Steve Tseng is our Chief Product Officer. He's the guy responsible for Citibank, Rabo, UniCredit, Mandiri, OCBC's global supply chain finance platforms today. Prasad is the Chief Architect of ACI Worldwide, and he joined us. We've got Narasimha, who's our Chief Technical Architect, who's been actually building all of our protocol layer. We've got Sally, who's had prior experience in supply chain finance before an MBA at NYU. And I've been in this business as a two-time entrepreneur in trade finance with 2 successful exits to SunGard and ACI. And also, I helped to start a bank in India called Yes Bank, which is a $9 billion bank today, as their first CIO. And I've spent 7.5 years in global digital strategy at Citi. We've got a terrific set of advisors. Michael Casey, who's the chairman of CoinDesk and the famous celebrated author of the Bitcoin blockchain and the Truth Machine. I've been actually working with him on some power decentralized projects for the last 3 years as part of MIT Media Lab's projects. Ajay Agarwal is an institutional investor and advisor. He basically sold one of the first natural language patent platforms called United Lex. And we got Brett King, who you all may know, who's the CEO and chairman of Movement. And he's somebody I've known for a number of years, and he's a strategic advisor to our project as well. We've got Venu Parmeshwar, who's the CFO of Citigroup EMEA, who's helping us on the financial structuring side. We've got Johnson Lau, who's an operational banker on trade finance in Singapore. We've got Carol Rialini, serial entrepreneur and crypto investor, and also author of the famous book Bankrupt, looking at how to change the financial service industry. We've got a number of partners, Accord, who basically is working on the standardization of the lexicon or the taxonomy, for smart contract from a legal perspective. So how do you take a legal contract and convert it to smart contracts? We are actually anchoring the purchase order section of that particular industry consortium. We're working with Sirion Labs to look at how to tokenize service contracts, which is a $7 trillion industry. We're working with Medici, which is a big fintech accelerator, which has cataloged about 10,000 startups around the globe, and we're partnering with them. And we have Integra, which is out of Bangalore, who's doing a number of blockchain projects with Japanese investors. So we've got a terrific series of partners, and looking to grow that through our protocol and our ecosystem. Yeah, from a go-to-market strategy for 2019, we are focused on the buyer and buyer-centric adoption. And basically, in 2020, we're going to shift focus onto the seller side once we have enough data to create effective credit risk algorithms using machine learning. And then basically, stage 3 is really going much more broad and open and opening up our protocol to new industry areas such as syndicated loans and insurance P&C claims. That's basically our roadmap. We are launching our protocol in the first week of November, and we will basically launch our first application, which is dynamic discounting, in March, followed by a marketplace in Q2 of next year. And I think that's it. Join us and trade on top. Thank you.
So we're at booth 223, right around the corner. You can come talk to us about our tokenomics, and also our ERC standard right now is on GitHub publicly. Thank you, guys.